Welcome to The Explainer. Today we're unpacking Alphabet's massive Q2 2026 earnings report. But look, we are moving way beyond the standard headlines here to see exactly how artificial intelligence is fundamentally reshaping their financials from the ground up. I mean, this isn't just your routine quarterly update. This is a fascinating look into a tech giant right in the middle of a massive structural evolution.
And we're starting right out of the gate with an absolutely staggering number. Especially for a mature tech company of this scale, a 298% jump in net income. We're talking about reaching $112.1 billion in pure profit for just a single quarter. Literally, that's the kind of leap you'd expect from a breakout startup, right? Not one of the world's most established corporations. So how in the world did they pull it off?
Well, to see how they achieved this, we're going to follow a quick four-step agenda. First, Alphabet's record-breaking quarter. Second, how AI fuels cloud growth. Third, solving the $98 billion anomaly. And fourth, funding the AI future.
Let's jump right into Section 1, Alphabet's record-breaking quarter, and look at those Q2 2026 financials.
The top-line figures here are incredibly robust. Alphabet brought in $119.8 billion in revenue. That's a 24% growth year over year, which impressively marks their 12th consecutive quarter of double-digit revenue growth. But what's even cooler is the efficiency. Operating income jumped 30% to $40.7 billion, meaning their operating margins actually expanded by 2 percentage points to reach 34%. So they aren't just making more money, they're actually keeping more of every single dollar they make.
And if you want to know the engine behind this machine right now, CEO Sundar Pichai explicitly points out the core catalyst. He noted that their AI investments are, quote, redefining what's possible across every part of our business. They are fundamentally attributing this broad operational success directly to their aggressive AI integration.
Which brings us to Section 2, AI fuels cloud growth. Let's look at the segment breakdown.
When we break down the overall segment revenues, it is super clear that Google's services, so Search, YouTube, Android, that is still the massive cash cow, bringing in $94.5 billion. Google Cloud represents a smaller slice of the pie at $24.8 billion, with other bets making up just a tiny sliver at $382 million. But you really have to look at the contrast in growth rates. While the massive services segment grew at a very healthy 15%, Google Cloud absolutely skyrocketed by 82% year over year. Pichai noted this was specifically driven by intense enterprise demand for their AI solutions and infrastructure. It's a real game changer.
And this explosive cloud growth, it isn't just revenue without utilization. Listen to this. Nearly 90% of the Fortune 100 are now using Gemini Enterprise. Their Gemini models are processing a mind-bending 22 billion API tokens every single minute. And on the consumer side, the Gemini app now boasts 950 million monthly active users. It shows an incredible global reliance on this new AI infrastructure across the board.
All right, moving to Section 3, the $98 billion anomaly, where we solve that huge profit jump.
Because we absolutely have to ask the critical question. How exactly did Alphabet's net income jump nearly 300% to over $112 billion when their top-line revenue only grew by 24%? It's a mathematical disconnect. It tells us something really unusual happened this quarter.
The answer actually isn't in the primary operating segments at all. It's hidden deep in the supplemental tables under other income and expense. Sitting right there is a sudden, massive net gain of nearly $98 billion. To put that into perspective, in the exact same quarter last year, that line item was just $2.6 billion. So, the crucial takeaway here is that this $98 billion windfall, it wasn't from selling more search ads or expanding cloud storage. According to the filing, it was primarily the result of net unrealized gains on their equity securities. Basically, it was a massive paper profit driven by favorable fluctuations in the value of the companies Alphabet has invested in.
And the impact of this anomaly is just huge. This single line item artificially boosted their diluted earnings per share by a massive $6.26. Now, once you factor out this one-time paper gain, their underlying operating growth is still fantastic, sure, but it completely demystifies that jaw-dropping net income surge we saw at the start. Mystery solved.
Finally, let's look at Section 4, Funding the AI Future and Scaling Global Compute. Because building the future definitely isn't cheap. In June 2026, Alphabet executed a massive $49.6 billion equity capital raise.
The stated intention for this incredibly large war chest, well, it's earmarked specifically to fund the enormous capital expenditures required to scale global AI compute and infrastructure. They are gearing up for a marathon of spending.
And their cash flow statement shows the breathtaking scale of this AI arms race. Purchases of property and equipment, which, by the way, is where those massive data centers and TPU systems live, hit an astounding $44.9 billion in just one quarter. For comparison, that is more than double what they spent in the exact same quarter last year. Which brings us to our final takeaway. Alphabet is fundamentally reorganizing its massive resources and operations around artificial intelligence. And they absolutely have the incredible top-line growth to show for it right now. But it really leaves us to wonder, as they raise and spend unprecedented billions on data centers and compute infrastructure, will these massive investments continue to pay off in the long run? It's the ultimate high-stakes bet on the future of technology, and we'll be here to explain the numbers as it unfolds. Thanks for tuning into The Explainer today.